Good morning, everyone, and welcome to the PivotBoss pre-market video for Thursday, November 3rd, 2022. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. You'll notice after yesterday's FOMC statement and the Fed interest rate decision, we got ourselves a new FOMC key level for the ES. That level you saw initially price rallied, it saw a higher high failure and then dropped significantly the rest of the day, finishing well over 125% of average range with a high range day. Over 140 points of range yesterday, a tremendous day here. Now, this looks very similar to how it played out over here in September. In September, you had a narrow range going into it, and then you rallied and dropped to close on lows. And a narrow range here going into it, rallied and dropped. And then again, what happens is the next week to 2 weeks, you see continuation, and then you see overall weakness with a downward bias here. So is this the beginning of one of these stretches here where we work our way downward? How far do we go? And as of right now, the previous month's midpoint here, which is about 37.15 or so, let's grab that number, 37.12, that level is the key to how much more downside we'll see. That is the midpoint of the previous month's range, previous month's high, previous month's close. So far, those two levels offered over the first 2 trading days of the month, so you go test the midpoint. If there's a failure at the midpoint, maybe this bounces, but then it ultimately fails. That would open up the previous month's low, and that's 35.02. So right now, the key here, 37.12, 3700. We may be able to go through that level, maybe 3700, and then reclaim acceptance back above it. That could open up a retest up here. But as of right now, with the way that the market reacted to the Fed yesterday, it looks very similar to what we've seen before. This type of sell-off after strength looks very similar to what we've seen before as well, and that could suggest at least another several days of weakness up ahead. So again, we'll be keeping an eye on the previous month's midpoint for a gateway downward. Now, if there's some significant reaction here and we see a major rejection there, perhaps we come back up and we're testing back higher and trying to go this way. But again, that's going to all depend on the previous month's midpoint. Let's take a look here at the NQ. You'll see right now the NQ, this one had a nice developed rounded bottom, very clear resistance. We talked 11.75, 11.8 for a breakout, and so far this month we hadn't seen any of that. Instead, taking the previous close offered, yesterday's high was the previous month's close, and then we saw a high range sell-off again, over 125% of ADR here for the NQ as well. Big time day, over 400 points. Yesterday's range, actually 551 points of range. 551 points of range yesterday. This thing's been averaging right around 450, 400, on the high end, so 400 to 450. Today's range could be somewhere in that zone, 400 plus points. So if we take a look at today's high, 11K, we could be looking 400 points down and pointing to at least 10.6. So that's if the high of the day is in. Perhaps it's not. We'll see how it develops here. But this break at the previous month's midpoint is significant, and again opens the door to a test at the previous month's lows, and likely through those levels. So it could be that this sell-off right here could trigger again another big rotation down. This is the Fed last time. Overall, it triggered that rotation down. When we had the July FOMC, this one actually rallied, but again, the strength was seen on the first day. Second day, you saw continuation and a couple of weeks of further upside continuation. So again, we'll see how this one develops right now, but as of right now, this thing is taking the previous month's midpoint offered, taking that FOMC key level offered, and that means we'll likely drop until we see an equal and opposite rejection that can then bring us back for a retest at the FOMC key level above. Okay, let's take a look here at crude oil. Now, crude has been very stuck in the middle of this range. You can see right here we have this great triangle type of pattern that's developing right here. You have the lower edge right here. The problem is this thing has been chopping around the midsection of that range for a while now. A lot of back and forth and no real decisive directional conviction right now. Even if we were to push higher, these 94s right here likely smacks price back down. If we were to drop down here to 80 or so, we probably bounce back up. So right now it's mostly a range-bound choppy market, not a whole lot of good directional conviction, and at the moment 90 continues to be resistance for this market. It got above it here, but it failed back below it. So if there's a rejection at 90, perhaps we're headed back to 86, maybe a little bit lower as this thing continues to experience whipsaw price action here toward the apex of this triangle. Okay, let's take a look now at gold futures. You'll see right here gold giving it up the previous session here, gold rallying initially right after the announcement, and then that high was rejected. That previous close right there rejected. That's the previous quarter's close, and we've seen price drop. We now see new lows here as this thing has dropped below the 1620. That's new lows for the year, and it tests the previous quarter's low. So that's the previous quarter's low, previous quarter's close, rejected the close yesterday, testing the low today. This would be a triple bottom if we can somehow turn around, but we've seen how aggressive this downtrend has been. This market wants nothing to do with prices above 1680 right now, so we could be looking at a push toward about 1590. If we see expansion from this previous quarter's range, then the S25 would be the big level here to watch. A pullback into that zone. As a matter of fact, that's a key range low. So that's a key range low, 25% extension, and when you get to that point, that tends to be a reactionary pivot there where you see a decent bounce. So we'll keep an eye on that. From the previous month's range, your S25 is there as well. So you got two 25% extensions all at about 1590, 1593. That's going to be the zone to watch here if we continue through this area for perhaps a responsive short-term bounce. All right, one more here. Let's take a look at Ethereum. Ether futures here. This one, you got the new FOMC at 1558. You know, we've seen a little bit of strength out of this one over the course of a week or so, and lately here, selling tails developing off of yearly VWAP. Selling tails yesterday was an outside reversal with a downside break through two-day lows. Today you see a pullback, a retest of the breakdown point, a retest of the midpoint of yesterday's range, and a retest of the FOMC key level, and right now all of those being offered and a rotation back down. So this could open up a return back toward 1408.80. That is the midpoint of the previous month's range. If you're going to take the close offered and take the previous or yearly VWAP offered, that leads us back toward the previous month's midpoint and perhaps even back to the quarterly break-even point down below. So this is going to be interesting to see how this plays out here, as this early pullback has been defended so far, which could lead to an inverted checkmark trend day down for a push toward 1408.80 over the next several days. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.